Hi, it's Dean Odell with 7 Gables Real Estate in the Odell Group. Welcome to the September 24th, 2020 version of Tustin Talks. And boy, do we have a lot to talk about. So let's get started on the charts. All right, guys, so let's look at the active listing inventory year over year. And boy, does this tell a story? I mean, we're starting to see that the COVID effect on the sellers has gone away. The buyers, it went away a while ago, but the sellers have really started to come out and get their homes listed. I want you to look at the red and purple lines because you can see how similar those are. That's kind of our normal curve for listing inventory throughout the year. That's very normalized. Now, if you look at 2018 and you go, well, okay, what was going on in 2018? Well, interest rates were climbing really quickly at the last part of the year, if you recall, and rates got almost up to 5% or so. And inventory was just standing, so you can see how the listing inventory just continued to climb towards the end of the year in 2018. Now we go to 2020, which is the green line, and we look and we go, okay, what's going on there? Well, you can see that the inventory is down to 4,213 homes versus 6,860 last year in 2019. We're down almost 63% from last year. We had that much more inventory to sell. So that's been tough. And just in the last 30 days, we're down about 39 homes. That's normal that we would start tapering off this time of year, but very interesting when you compare the year by year there. So let's go to the next chart. This chart is demand when looking as compared to the prior 30 days, okay? So this is the overall chart, and you can see that nice V-shaped recovery on the green line. You can see the rest of the years and how things were moving there. In the last 2 weeks, our demand has dropped about 3%, which is normal for this time of year. We've dropped from 3,340 homes down to 3,256. And if you compare that with last year in 2019, the purple line, you could see that last year at this time, we only had 2,401 homes that went into escrow. So 855 less sales last year than this year. And think about the fact that we have less inventory this year than last year. So that's pretty crazy. Sorry to interrupt this program, but you know what? Let's make sure you're subscribed to Tustin Talks. Click on the button below next to our name, and if that doesn't work for any reason, you can just go to TustinTalks.com or our websites, the Odell Group and NorthTustin.com, and subscribe there. So let's continue. Orange County expected marketing time year over year. Well, this is the lowest level since the Orange County Housing Reports started tracking this. This began in 2012 when they started tracking. Right now it's 39 days. Last year it was at 86 days. You can see what makes up a deep buyer's market, slight buyer's market, balanced market, slight seller's market, and hot seller's market by the days that the house is actually on the market before it goes into escrow. So you can see how we come up with a hot seller's market at 39 days. That's where we are. Okay, so when we look at this next chart, this is our, well, what I call my favorite chart, right? Because it really demonstrates the speed of the market and the current demand share by inventory share. So if you look at the expected marketing time, first column versus the last column, this year versus last year, you can see how the time for marketing your home and getting an escrow has really dropped. That's why most of those are green color, which indicates a hot seller's market. And that is all the way up to $2 million now. That is amazing. And then when you look at the 2 to 4 million, that's a balanced market in white. So the light green has gone away, which is a slight seller's market, and the light red has gone away, which is a slight buyer's market. The only red on the chart there is a dark red buyer's market in the over $4 million range. You can see the share of housing inventory as compared to the share of current demand. And you can see why over $4 million would be a dark red when you have 8% of the housing that's listed is over $4 million and only 1% of the demand is over $4 million. Compare that with the under 750 market where only 33% of the inventory is in that price range where the demand is 48%. So there's just so much more demand than inventory, right? So that's what makes up these hot sellers markets. Let's move to the next chart. All right, so now this is interesting because this is all homes in escrow. This is the total demand when we look at this year versus last year, okay? So this includes that 30-day pending chart that I showed you guys. So when you look at where we are, again, you can see that nice big V-shaped recovery, and you can see how the pending sales are at the highest level we've had in the last 4 years, at 4,480 homes approximately, where last year we were closer to the 2,800 mark. So we are way up in terms of what's sitting in escrow. All this demand, along with the refinance boom because of lower interest rates, is also causing some big delays in escrows closing. So I know the sellers that are out there are getting frustrated and the buyers are getting frustrated, but you guys, we're shoving so much demand through the system, there's just not enough days in the week right now to keep up with it. So gonna have to be patient there on the escrows. Probably the 30-day escrows are pretty risky unless you've been completely pre-approved and underwritten going into your deal. So let's move to the next chart. Looking at the closed sales chart, you can see that we're up 12%. 2,823 homes last year that closed in the last 30 days versus 3,153 this year. Okay, sellers, like I said in the intro, I have some special news for you. Buyers, you probably want to pay attention as well. This is going to go along with the advice I'm going to give you, sellers. So I'm going to put another chart up right now and talk about that a little bit. Sellers, I'm going to give you some pricing information. This is valuable advice. We've experienced this on our own listings. We've seen it on our competitors' listings. It's just very accurate and true. Although it's one of the hardest things for you guys to believe, because a lot of times when an agent comes out to list your home to tell you what your house is worth, it's human nature to want more money. I've rarely in my 30 years come out to a house where people said, oh really, my house is only worth that? Okay. As a matter of fact, the national average, because they actually have tracked this as well, sellers overestimate the values of their home by average of 8%. Okay, so that's just something to keep in mind. But the kind of market that we're in right now, what you really need is a skilled agent who knows how to negotiate multiple offers, give you the most exposure, which we certainly can do for you. This is the data now that shows that people, if you look at this chart, when they do not have to reduce their price, that made up 76% of the sales, and the people received 99.6% of their sales price, and it only took on average 19 days to sell. Now, when people had to reduce their price 1 to 4% because they were on the market 65 days on average, so they had to do a price reduction, that made up 15% of the sales with a sales price ratio of 97.8%. So you can see when you look at what that was compared to the original list price, you know, it was 95.4%, where if you had no price reduction, it would have still been the 99.6%. Now here's what's really crazy. Look at the red bar there. When people have to reduce their house 5% or more, which makes up 9% of the sales out there, the home only sells for 85.3% of its original list price, okay? In the end, it might sell at 94.7% of the reduced price, but look at the average days on the market, 125 days. That right there is what I call painful, all right? You do not want to live through that. There's a better way to sell your house these days, and we know what it is. Also, I'm going to quote a few quotes here from this Orange County housing report, because it's just nice to hear it come from someone else that doesn't have a stake in selling someone else's house, right? You know, this is from Steve Thomas of Orange County Housing Reports. Accurately pricing is critical in obtaining the highest and best sales price. Homes that do have to reduce ultimately sell for a lot less in a lot more time, okay? An astonishing 11% of active listings reduced their prices last week in Orange County. The first few weeks after coming on the market is crucial time with the greatest exposure and heightened buyer activity. There is more activity in the initial 2 weeks than any other time when it's marketed. Reducing the price to be more in line with the home's fair market value is not met with nearly the same fanfare as a home new to the market. When something is brand new to the market, that is exciting. So the warning to sellers here is overprice a home and risk wasting valuable marketing time and obtaining a smaller proceeds check at the close of escrow. Instead, carefully and methodically arrive at the asking price and achieve the best outcome with the most amount of money. Thank you, Stephen Thomas, and amen to that. Boy, there's another guy with a lot of experience that knows what he's talking about. He's been in the business about 30 years as well. You guys, get the right agent, get the right advice, get the house prepared properly, and get the most money you can with the right marketing plan. I'm telling you, this market is so busy and so crazy right now that you need a team like ours just to keep up with, what do you do when there's 27 showings on your house? How is a single agent gonna handle something like that, right? So what if they have a couple of listings? Now all of a sudden they got 60 showings they've got to deal with, So you need the power of a team on your side, so give us a call and we will get you going in the right direction, okay? It's never too early to call. Just let us know you're thinking about selling and we'll figure out the timeline that works for you, all right? Buyers, here's my advice to you, okay? That might be frustrating to sit through and listen to with those sellers, right? But here's the good news for you, okay? Of course, interest rates are low. The market is super competitive, but guess what else is happening? I did a little calculation the other day on MLS and found out that almost 20% of the homes approximately are falling out of escrow, okay? So a lot of these, some of these you won't know about because the seller accepts a backup offer in case their buyer comes out or calls the agent and says, hey, is your buyer still interested, right? So don't get discouraged if you're in a multiple offer situation. Get yourself into a position where you're able to be called if that house falls out of escrow, because 1 out of 5 times it is, and a lot of times you don't know about it. But again, if you got the right agent, working for you, they know how to handle these kind of situations and always keep you in the best position to get the house. So give us a call if we can help you out, and we'll see you on the next Tustin Talks. Thanks. Bye-bye. The Odell Group's been around for nearly 40 years. We are ranked number 9 in transactions closed, and we can give you the right advice to help you make good decisions. So please click on our subscribe button here and start watching the videos and let us know if there's anything we do to help you.